We all dream of wealth and financial freedom, but can we do it sustainably in the crypto world using real-world assets?
I'm not a financial advisor.
My name is Jay Chains, and today I'm going to break down how to make passive income gains with real-world assets on the blockchain, or as you might know them, RWAs. Unlock the potential of passive income in the crypto world by leveraging real-world assets. And I'm not just talking about staking tokens. There are several wealth generation strategies with RWAs that I want to put on your radar. And at the end of the video, I'm going to point you to some interesting RWA projects that offer passive income. But first, let's overview the types of passive income that we're going to find in this strange new world of real-world assets. There's the classic tokenized RWA staking and yield farming. Several platforms allow you to stake or provide liquidity with tokenized RWAs, representing ownership of real-world assets like real estate, commodities, or fine art. By doing so, you can earn rewards in the form of additional tokens or a share of the platform's fees. But we've seen that before, so let's dive a little deeper. You can lend your tokenized RWAs to borrowers on decentralized finance platforms, DeFi, and earn interest on the loans. Now, alternatively, you could borrow against your tokenized RWAs to access liquidity while still maintaining ownership of the underlying asset. And later in the video, I'm going to zero in on how you can do this with Ondo. So make sure you watch until the very end. Some projects issue tokens that represent shares in a pool of real-world assets. These tokens may distribute dividends to holders based on the income generated by the underlying asset, and I found a platform that does this with real estate. Don't miss that explainer in just a minute. And finally, there are RWA-linked synthetic assets that track the price of real-world assets without requiring direct ownership. Now, you could trade or provide liquidity for these synthetic assets on DeFi platforms and potentially earn fees or rewards, which is a little like leverage trading, which you can do on Phemex.
Join Phemex today using my link in the description for an insane trading bonus, low fees, and secure trading.
Now, we're talking passive income here, so it's not enough to talk about how it's done. I want to point you to some specific examples of who's creating opportunities for passive income with RWAs and how to get on the action. So first, let's take a look at this new tokenized real estate company called Lofty. Operating on the Algorand blockchain, this company wants to bring passive rental income right to your front door. Now, to explain how it works, they provide the following scenario. Lofty enables you to invest in a fraction of a property's equity through digital tokens. These tokens are kept on the blockchain, and when you buy tokens for a particular Lofty property, you become a member of that DAO LLC that owns that property. Now, this also entitles you to a share of the monthly rent payment. For example, if you want to invest in a $300,000 property, you can buy 100 tokens worth $50 each. This means you're going to own 1.67% stake in that property. If the tenant pays $2,000 a month, you're going to earn 33 cents monthly for every $50 in tokens you own. Now, this isn't my endorsement of the platform. I'd have to do a lot more research on exactly how they plan to execute these real estate transactions and how they're going to maintain all these properties. But what I want to do with this is show you how these companies are using RWAs to tokenize real-world assets and putting real money in investor pockets. This company uses AI to evaluate properties, creates a DAO-based LLC, and after this, tokens for each property are created on the Algorand blockchain at a price of $50 each. Now, I'll say it again, that I have to research this company a lot more to know whether I think this is a good place to stash my money, but you gotta admit, this tech exemplifies the potential for where we envision blockchain. Welcome to the future. Great example of real-world passive income on-chain, but what about keeping RWAs all on one platform and remove some of that execution risk? Well, leave it to my favorite crypto project of this year, Ondo Finance, to make it happen. Ondo Finance is offering a few ways to generate passive income through their tokenized RWA products, and if you didn't know already, Ondo offers 3 of them. OUSG, a token that enables investment in US Treasury bills primarily through BlackRock's USD Institutional Liquidity Fund, or the BIDL Fund, and BlackRock's Fed Fund. The second is USDY, a yield-generating tokenized note secured by short-term US Treasuries and bank demand for deposits. And lastly, OMMF, which tokenizes US government money market funds to provide a dollar replacement for settlement and collateral in the OTC trading and lending space. Now, for this passive income video, I'm going to focus on only two of them and how to make passive income with USDY and OUSG. US dollar yield, or USDY, is a tokenized fund that invests in short-term US Treasuries and bank deposits, offering a yield that reflects the interest earned on these underlying assets. To earn passive income, all users have to do is mint USDY tokens by depositing USDC onto the Ondo platform, and USDY holdings will accrue interest automatically, and it can be redeemed for USDC anytime. Right now, the APY of doing this simple transaction is around 5%. Now, since OUSG is an investment in the US Treasury bills, which is considered one of the safest assets globally, but what is a Treasury bill? I've put together a 30-second explanation of what exactly a Treasury bill is, or T-bill. Imagine you're lending money to the government, and they promise to pay you back with a little extra. It's like an IOU, but...
That's as good as money, sir. Those are IOUs. Go ahead and add it up. Every cent's accounted for.
When you buy a T-bill, you're essentially giving the government a short-term loan. In return, they give you a piece of paper that says they owe you that money, plus a little bit of interest. T-bills have relatively short maturities, usually ranging from a few weeks to a year. This means you get your money back plus the interest fairly quickly. T-bills are backed by the US government, which is why many believe it's one of the safest investment strategies out there. And Ondo's OUSG provides exposure to these US Treasury bills. Now, by holding OUSG, you earn interest corresponding to the yield on the underlying treasuries. And since it's a regulated product, it's important to note that OUSG is currently only available for qualified purchasers due to regulatory restrictions, or with a current APY of about 5.24%. Because Ondo utilizes BlackRock's Tokenized fund, or the BIDL fund, to back its OUSG token, there are some important considerations like minimum investment. Ondo often has minimum investment requirements, especially for their institutional grade products like OUSG, so make sure you meet these requirements before considering the investment. And fees. Ondo may charge fees for minting, redeeming, or holding their tokens, so it's important to familiarize yourself with the fee structure before participating. Now, depending on your jurisdiction and investor status, you may need to meet some certain KYC or AML requirements to access Ondo's products. And as always, there is a market risk. While US Treasuries are considered low risk, they are still subject to market fluctuations. But if you're in crypto, you're already used to that, am I right? Now, many real-world assets bring us from a largely unregulated landscape, which is most traditional cryptocurrency, and into the highly regulated world of securities. This hedges some risk because these investments are usually a bit safer. It can also be limiting for returns because we're not navigating a highly speculative and volatile landscape. But passive income with RWAs is a great way to build real wealth. It might not have the same upside as gambling on meme coins, but the odds of success, well, they're much higher, and capital invested is almost always preserved, especially when we're talking about US Treasury products. Passive income is making that switch from get rich quick to building and maintaining wealth over a long term. That's why I wanted to put these opportunities on your radar. Comment below your strategy for passive income with RWAs, and I'll see you on the next video.